welcome back to another video. In this video, we are going to cover the RSI. We are going to break down what is the RSI, how does the RSI help us, how is the RSI calculated, and we are going to go over the RSI in action, right? So first and foremost, what is the RSI? The RSI stands for Relative Strength Index. The RSI is a momentum indicator that measures the speed and change of price movements which showcase overbought and oversold levels. So once again, the RSI is a momentum indicator. We use it to identify if a stock is overbought or oversold, right? So for example, this is how the RSI looks. If you guys look down here, we have the RSI. You can see typically anything above this 70 mark is considered overbought. Anything below this 30 mark, if you guys take a look, the numbers are right here. Anything below 30, below 30, below 30, below 30, it is oversold. The RSI says if something is overbought, there is somewhat a probability that the stock may go down. And it says if the stock is below 30, there is somewhat of a probability it may go up. And I'm going to break that down. I don't want you to stick with that. I will break that down and go more in depth with it, but that's what the RSI basically represents, right? Now let's understand the RSI a little bit more. Now the RSI ranges from 0 to 100. It has a range from 0 to 100. Now in those ranges, there's two important points. One is the 70 mark, as I just showed you guys, and the second is the 30 mark. Now, what are these marks? What do they represent? So basically, in the first example, is if the RSI gets above 70, let's say this is the RSI, it gets above 70, that indicates that the stock is overbought, which indicates it may possibly, and I use the word possibly, go down because it is overbought. Now, in the second example, it says if the RSI gets below 30, that indicates that the stock is oversold, which indicates it may possibly go down. If the RSI gets below 30, it indicates that the stock may possibly go down. Now, I don't want you to be stuck on that. I'll break this down. I'll break down how to properly use the RSI, but don't be too stuck on this meaning and don't go to your charts and apply right away and say, okay, if it's above 70, I short or I sell. If it's below 30, I buy. No. This is what the RSI represents, but there's a way to properly use it, and I'll show you what that way is. Before we jump into that, let's first understand how is the RSI calculated. This is the formula of the RSI. If anyone wants to do the formula, go for it, but like I mentioned before, you don't have to do the formula. The system does everything for you, but the whole idea is the RSI gets the average gain and it gets the average loss, right? Once it gets the average gain and the average loss of the stock over a set period of time, which is usually 14 periods, right? It then uses those numbers to see how aggressively the stock is moving up or how aggressively it's moving down to showcase us potential oversold or overbought areas, right? So once again, you don't have to do the formula. The formula is done by the program or platform that you guys use, right? Now let's simplify the RSI and I'm going to show you an example, right? Now this is how I want you to think about the RSI and you'll understand why it makes a lot of sense, right? Now think about the RSI in this situation. We have a car. Think about a car. In a car, we have the RPM. This is the RPM of a car. Besides the RPM, we also have the speed. Now question for everyone, right? So this is speed. And this right here is RPM. So question, if the RPM of a car is going up, it starts going up, it starts going up, it starts going up, what will happen to speed? Speed's gonna go up too, right? Now, if the RPM of a car start decreasing, what do you think is most likely gonna happen to speed? The speed of the car is also going to decrease, right? In order for a car's speed to go up or aggressively increase, the RPMs will also go up. Now think about this. Imagine the speed of your car is going up and higher, like let's say it's at 140 miles per hour. But when you look at your RPM's at 0, it hasn't moved. Now that's a problem, right? That's a problem. Now your car has a problem. But if your speed of the car is at 140 miles per hour, your RPMs are at 6,000, right? And you have increased RPMs, that's normal, right? Now that's the same concept with the RSI, and I'm gonna get into it in a bit. Think about the RPM as the RSI, and think about the speed as the price of a stock. Now, once you think about that, we are now going to apply this concept to the RSI, right? So let's jump right into it. Now, if you guys take a look at this example, right? RSI is above 70. Why is the stock still going higher? So basically what the RSI tells us is, hey, if the stock gets above 70, it's overbought, and if it's overbought, you should either exit or you should either short, right? But what happens? Does the stock go lower? No, it consolidates and even goes higher, right? If you look at more examples, you guys can see more examples, more examples, more examples. What happens? RSI says to sell or short. RSI says to sell or short. RSI says to sell or short, but the stock keeps doing what? It goes higher and higher and higher. Now, what you have to understand about the RSI, like I mentioned, think about this as speed and RPM. This is the speed, right, of a car, and this is the RPM, right? Now, once you have that laid out, think about this. Imagine the speed of your car is going up. It's increasing, increasing, increasing. What is most likely happening to your RPMs? They're also increasing. This is normal. All this is representing is that the stock has been aggressively on green days. It's been aggressively going up. Now, the problem a lot of people make with the RSI is they see this and they're like, all right, short. All right, exit my position. No, like I mentioned, follow price action. We are on a healthy uptrend, right? A healthy uptrend. If we're on a healthy uptrend and this stock reverses, we need catalysts. We need the price to break certain levels for us to actually short or think it's going to reverse. Yes, it may be overbought, but that doesn't always mean that the stock is going to go down, right? Because if something is overbought, it might be extended, but that overextension could lead to the stock consolidating, taking a break, and then continuing. And that's what we went over in chart phases. If you remember chart phases and we ignore this, you can see strong move up, consolidation, strong move up, consolidation, strong move up. Look at the breakouts. Look at the breakouts. Simple price action, right? Now, that if you think about the concept of speed and RPM, it will make reading RSI a lot more easier. Now, another thing I want you to understand is when you are using when you are using RSI, very, very important to understand this part. Do not use them on trending stocks. RSI on stocks that are trending up or down usually just confirm price action. RSI, for people that do use them, like to use them in stocks that are trading sideways, and I'll show you guys examples. If something is going on an uptrend, remember, on that huge move up, the RSI is easily going to get above 70. When it pulls back, don't short. Look for consolidation and then the breakout. All right, here is another example. RSI is below 30. Why is the stock still going lower? If you take a look here, RSI is below 30. Way below 30. It even gets to 10. It gets to an extreme low point. Why is this stock still going down? It's still going down because of the speed and RPM example. Speed of the car is going down. So the RPM is going to go down too. Now the reason it's oversold is because the speed aggressively went down. That's why the RPMs aggressively went down as well. But when the stock slowly goes down, you'll see the RSI doesn't move that much. It moves very, very, very aggressively when the price or the speed go down. And not, like I mentioned, when a stock is trending and it's selling off, don't try to catch the bottom by looking at the RSI. That's very ineffective, right? Now, how does the RSI help us? RSI helps us with the following. It shows us oversold and overbought conditions. Type it right there. Right? Shows us oversold and overbought conditions. It confirms price movements. So if let's say a stock is trending on an uptrend, a high RSI would confirm that uptrend. It warns us of potential price reversals through something called divergence. Like I said, I will go over divergence in the upcoming lessons, but it also helps us with something called divergence. Now let's jump to a chart and let's break the RSI down a little bit more. All right, if you guys take a look here, we're on Netflix 1 year, 1 day chart. I'm going to show you guys how to apply the RSI. Once again, we are on Thinkorswim TD Ameritrade's platform. If you want to apply the RSI indicator, you go right there. If you click that right there, you will get another screen popping up and search for RSI. Right? Depending on whatever platform you use, it might have a little bit different settings, but it's the same concept. Add selected, RSI now pops up. Once the RSI pops up, if you want to change the numbers, which I don't recommend changing unless you know why, you can change all of that from here. If you want to change the colors, same thing, all in settings. Okay, the RSI is now applied. Now, as the RSI is now applied, let's go through the RSI for a second. Right here, I have stock Netflix open. Let's take a look at this. Now, when you look at stock Netflix, a few things. Now, you guys can see what happened right here. Stock gap down, right? RSI obviously is going to go under 30 because the stock made a huge move down. Why? Because like I mentioned a million times, indicators follow price action. So the price has to move first, then the indicators move. That's why RSI is oversold. Now, if you look at this price action, you can see it keeps going lower, even though the RSI is below 30. Now, this is where people get trapped. They go, okay, it looks like it's going higher and higher and higher. What tends to happen? If you guys look, what tends to happen? Stock keeps going lower and lower. Now, if you understood simple price action, you would know whenever a stock makes a huge move down, it needs to take a break. Whenever a stock makes a huge move up, it needs to take a break. In those situations, if you use RSI, it will always give you false signals. Now, if you look at this concept here again, same thing. Right, let's analyze this stock real quick. If we look at these levels, we have a very, very crucial point for stock Netflix around 250s, right? So let's say we go to 252, we have a very, very important and key level for Netflix. Now, if Netflix can obviously break 250, we can have the low for the past year, but let's just see what's happening. Stock Netflix sold off right into a major support area. This went oversold. It went oversold. As it went oversold, what a lot of people do is right off the bat, they're like, oh, it's oversold. I should buy. Cool. Now, if you do take that trade, you have to understand, this is not giving you a signal. It's just confirming this aggressive move down. The stock just went down very aggressively, very, very aggressively. So this is obviously going to be below 30, guys. So don't get trapped into that. Now in this situation, yes, the stock is holding. But as it's holding, if I want to be a buyer, I would still not be a buyer maybe unless it, for argument's sake, breaks above 285, a critical point. And obviously there's other factors we'd have to look into. That's not the only factor, right? Let's go over another stock. Let's say we look at Snap. So Snap is an example that I put on the slides, but I actually want to show you guys something, right? So what I'm going to do real quick is I'm going to take the RSI off and I'm going to show you an example, right? So let's say we look right here. Let's say we look at simple price action right here. Now, if you guys take a look and we look at simple price action right here, what do you guys see going on? Let's start from the beginning. Stock hits this level, holds, boom, buyer step in. So we know we have a support area. Now, when we move forward, what tends to happen right here? Strong breakout, increase in volume, showcasing a sell-off, right? Breaks 1050, strong sell-off. Now, question for everyone watching this. Now, what do you guys think? Would you buy this stock right now? Would you buy this stock? Are there any indications looking at price action for you to buy? Think about it. Right now, would you buy this stock? No. The proper answer is no. Why not? Breaks a critical point, strong sell-off, right? Negative catalyst, the positive catalyst has not came in yet, right? It sells off, takes a break, gaps down, takes a break, sells off, takes a break, sells off, it's taking a break, right? Now, it's still on a strong downward movement. Now, if we have the RSI on, let's say I go and I apply the RSI real quick, right? You guys can see. What's the RSI tell us? RSI is telling you to buy or get out the trade, buy, 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 over and over again. But price action saying no. If you keep going down, what ends up happening? Stock stays sideways. It obviously makes a new low, as you guys can see, but it doesn't immediately start pushing up. It even goes lower and lower and lower. Look at that. Look at that low. RSI has been telling you to buy this whole time. It's not telling you to buy here or here, right? It kind of goes below one time, but overall, what happens with a lot of people is they're like, oh, the RSI is under 30. I see a green candle. It's going to go up. I don't want to miss out on the trade. I don't want to miss out on this opportunity. I need to get in. No. Price action, price action, price action, price action, right? Follow that, right? Same thing here. There's no buying opportunity. Now, I can open up this chart like I mentioned to you guys before, and I can say, hey, you want to see this cool indicator? Look at this. It was below 30, and look what happened to the stock. It went up. I can handpick a lot of different examples of an indicator and show you how great it is, but that's not the reality of it. The reality of it is they're not consistent, right? And knowing how to use them is obviously important, but knowing what goes behind them and all these things are also very, very important. So if you see one example like this, and you're like, oh man, I wish I could have bought. I could have got in at 4. I could have got out here. I would have made 100% over 100% play. No, this didn't go up for that reason. This also went up because around this time the market reversed, right? This is 1224, 1226 in 2018. The market reversed. Also earnings, positive catalyst came out, right? So there's a lot of different factors. Right now, if you keep looking at the RSI, if you keep looking here, same concept, price action. Let's focus on price action first. The same level the stock had a hard time breaking, right? That it did broke here. The same level it broke, it's having a hard time getting above. This is telling us to exit. But what eventually happens? Stock keeps going higher and higher and higher and higher and higher, right? You need to understand that when you are using the RSI, it's cool and all, but at a lot of times it is ineffective. It does not work, right? I personally, I don't use the RSI. I just understand basic price action. Now, what's the RSI telling us with basic price action? Let's understand that. If a stock makes a very aggressive move up, let's say 4 candles, let's say it went from $10 to $14. At this point, I don't even have to look at the RSI and I'll know it'll be maybe close to overbought. Now, if it comes down, if the stock does come down one day, it goes to 13, right? And it trades around 13 and the RSI is above 70, I'm not going to short. I know that this is taking a break. I apply my levels and I look for an entry after it breaks that level if it's a continuation play. If it's not, I'm not looking to trade that stock, right? Let's look at more examples. Let's say we go to, let's say OSTK. Look at the OSTK, same exact thing. Simple price action. Simple price action right here. If you start from this point, look at OSTK. OSTK here too is on a healthy downtrend. Healthy downtrend. This is telling you to buy, right? Does the stock actually go up? Absolutely not. Look what keeps happening. It keeps going down, down, and then it finally starts reversing. Why does it reverse? It reverses because there was catalyst here. There was catalyst, there was news, right? That's why it started reversing. See, consolidates, reverses, takes a break, continues. Do not get faked out by these. Understand how to use them if you do plan on using them. right? And like I said, I can pick one example and I can say, hey guys, look at this. It's overbought. That means it's going to go down. If you follow this indicator, you would have made so much money. That's not the reality of it, guys. Look at this time. Look at this time. Look at this time. Look at all the times. It did not, I repeat, it did not go up or down because of the RSI. RSI waits for price and then it factors that in. So it's a lagging indicator. This went down because of earnings. This went down because of catalyst. You guys can look into this. You can go to the date and look at the news. There was news here at 9:13. That's why the stock started selling off. There was a huge catalyst that caused this sell-off. So these are things you guys have to and should really, really, really pay attention to, right? Let's break down a few more. Now, before we break down a few more, I'll show you guys examples on a smaller time frame. Now, if you go back to Apple, right, same thing. If you look at Apple here, Apple, this whole time period is telling us that this stock is overbought, that you should short or exit. That's because of these big moves up. It's having a lot of green days, a lot of up moves, right? And when a stock has a lot of green days like that, it is going to be overbought. Does the stock fall? No. When is our short play, or when do we look to buy puts? Or when are we looking to short? If it breaks our critical point with obviously news and some sort of catalyst. You can see what happens here. Stock starts going in a downtrend. During that downtrend, multiple times, look what happens to RSI. It says oversold. It's telling you to buy. But the stock does what? It keeps going lower and lower and lower. You don't want to get trapped in that, guys. So make sure you understand how the RSI works before you just start using the overbought and oversold signal. Let's go to a 5-minute chart. Same thing here. Look at the 5-minute chart. Look what's happening. Stock Apple is saying overbought, right? Same concept. A lot of people say, oh, it's overbought. I'm day trading. Let me short. No. If it breaks that level on strong volume, cool, I can consider taking on the trade. But just because this is popping up, I'm not looking to trade it, right? You need to keep that in mind, right? And you can see throughout the day, stock goes higher, right? Let's look at another example. Let's say we go to Zoom, ZM. Let's see if we see anything here. Same thing with Zoom, right? In this situation, you can see stock makes a huge move up. It goes overbought. Does that mean the stock goes down? No, it takes a break. Boom, continues. It says overbought. It takes a break. It continues, and then finally falls. But obviously that was probably because of other reasons, not because of RSI. If a stock is trading in a certain direction, right, do not think that while it's trading in that direction that this stock is going to fall, go up, or whatever the case is. Look at Roku, right? Roku has been in overbought condition for the longest time. Roku did not fall because the RSI is above 70. Roku fell because of other reasons. There was catalyst, there was news involved that made sellers more aggressive. And then look what happens. Now it goes into oversold. Would I buy this right now because of that? Absolutely not. Why? Because it's on a downtrend. It's on a downtrend. It can maybe break 100 and continue to push down. It's taking a break. So understanding that is extremely important. Just to recap, RSI measures the price change movement. It measures how quickly price went up or price went down. Think about it as the speed and RPM of a car, right? The speed of the car is going up, RPM is going to go up. If the RPM and the speed go down, they're both going to go down. That's normal. When they aren't normal, when the speed goes up and the RPM goes down, that's called divergence, which I will break down in the upcoming lessons. But what you have to understand is the RSI does give out a lot of false signals. So please be aware of knowing how to use it. Now, the way a lot of people use RSI, before I end this, is they use it on sideways action. So if a stock is trending sideways, right, they would use RSI and say, okay, well, in this situation, RSI is above 70, so it's going to come down. In this situation, it's not above 70, so maybe it may not come down, right? So it just depends on what it's telling us, right? Now, the way I look at it is if you understand simple price action, you wouldn't even really need RSI, because this is only going to be overbought if there's a bunch of green candles. Now, if there's a bunch of green candles, like I mentioned in the previous lessons, and it's going up straight, I wouldn't want to get in on that breakout because the stock hasn't taken a break. But if I see a green candle and I see, let's say, a small green candle and then another green big candle, and let's say a red candle, that's showing me that the stock is taking a break. That's why the RSI is probably not going to be as high, right? And if that's the case, I'm watching for a breakout. Now that breakout, this breakout here is much, much more stronger. Breakout B is more stronger than A because in B, the stock took a break. A didn't take a break. So when it does pull back, it'll probably fail. This one looks a lot more stronger just by price action. And if you look at RSI in both situations, A will show you this, B will show you that, right? So if you understand that one simple thing, I don't even think you would really need RSI. Now, using RSI, do not use it on a day, on an intraday time frame. If you're day trading, there's other things to focus on if you're day trading. In my personal opinion, I think reading the tape, following support and resistance, and just understanding price action on a deeper level is going to do you much, much, much better than trying to use a bunch of indicators and trading off those.